This is how Tesla became the #1 tech automotive company that is worth the combined amount of all legacy automakers. Huge shout out to the work of Elon Musk and Tesla team.
Jason, you've said you were inspired by Warren Buffett, but not so much Warren Buffett 1.0, but more so Warren Buffett 2.0 when he met Charlie Munger and started focusing more on future cash flow. So how would you say you hit upon your investment philosophy? How did it evolve?
I realized that when he was going through his Benjamin Graham phase, he was looking for deep value. He's looking for those cigar butts. And that even by the end of the 1960s, that style of investing was becoming very difficult. And it was going to be very difficult to do that style of investing at scale. And he's subsequently has written about that a few times in his annual reports. So what ended up happening is when he met Munger, he started focusing on companies that had high return on equities or that became compounders. And once again, when he started paying more attention to what he actually owned in his portfolio through the 80s and the 90s, you realize that there wasn't a lot of deep value. You could look up the price to book and price to earnings multiples of these companies. And companies like Coca-Cola or American Express, these were not value stocks, these were growth stocks. And obviously as an investor, you want to get those stocks as inexpensively as possible, but you weren't buying the kinds of things that Benjamin Graham was talking about, which was stocks that were trading below book value or below their breakup value or their cash value. Even Benjamin Graham, towards the end of his life, in an interview I think he gave in 1966 or 67, said even then the world was becoming too efficient. He could do that kind of investing in the 40s and 50s, but most of that inefficiency had gone, and many of the really cheap stocks from a value perspective were ones that had tough economics. It wasn't just a question of changing the management. It wasn't a off the beaten path kind of company. So
we don't have any formula.
Warren, what do you consider the most important quality for an investment manager?
It's the temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Because this is not a business where you take polls, it's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Tesla works in other areas like energy generation and storage, which brings huge amount of revenue growth. Building Berlin Gigafactory is one of these factors which will help increase Tesla assets while manufacturing more cars. Would you consider investing in Tesla stocks? Let me know in the comments. Thank you guys for watching.